Bitcoin has been in the middle of a bull cycle, and the big question is whether we're going to be peaking this year according to the 4-year cycle, but it's also a question whether we're going to have a super cycle and how high it's going to go. In this update, I'm going to walk you through the entire scenario of Bitcoin and why I believe Bitcoin is about to hit 250k in 2025. There's at least one asset that has been performing great over the past 2 years, and that is Bitcoin. We have come from 16k in 2022, and we are currently hovering around 100k for the past 6 months. And that is great, as however, this year Bitcoin has been starting with the new all-time high that was created on the exact day that Donald Trump got into the office. And yes, since that particular moment, we have been swimming around the all-time high. We have been consolidating, and we have been questioning whether or not Bitcoin is going to receive or have more momentum going up. And the day that we printed the all-time high was a very positive day. However, on that day, almost everyone was expecting the markets to go ballistic, but that was not true, which brings the case that at that point in time, probably Bitcoin was slightly mispriced to the upside as we went from 70k towards 105k, as none of the actual upside was true, given that the macroeconomic tables have been completely shifting into a pattern that we didn't want to see, which was chaos. However, during that period, Bitcoin has been stagnant, and throughout the entire year, the markets have been consolidating around the 100k barrier, which is a very vital area. It's also, if you want to take profits, you're going to do it at round numbers. And back in history, Bitcoin was also consolidating around 10k for a long period of time. And now we are consolidating around 100k for a long period of time. But we are pretty much consolidating and following the M2 supply chart, which is now the biggest meme in the space. It was introduced by Raoul Pal, and as you can see, it is very nicely correlating with the price action of Bitcoin, and this chart is being used for a recent price action. However, if you zoom out and you use the exact same overlay for the past 6 to 7 years, it is also accurate with the data. So that brings me to the point to suggest and discuss why this data is so correlated with each other. And that's why I wanted to bring out the explanation of what M2 actually is. So the M2 supply, as you can see in the chart, is an economic phrase for money or cash. And you've got multiple sort of titles for this. You've got M1, you've got M2. And in short, M2 is basically M1 plus savings deposits, small denomination time deposits, and balances in retail money market funds. That brings me to the question of what is M1? Well, it's the most basic form of money, which is currency in circulation, demand deposits, and other liquid deposits. And you can see that we had a very big upwards move in the amount of supply on money during the COVID crash. And you can see it's a constant factor going up. And you could also argue that the amount of money being printed or added by the Fed is the actual inflation that is going into the system. I don't know why everybody's making it so complex, but for instance, if we can see with the chart of the Fed, the amount of money which has been added in the system went from $16,000 billion in 2020 to $22,000 billion in 2022. From 2020 to 2022, in just 2 years, we've seen a 38% increase in the entire M2 supply, and that validates the high inflation we have been seeing with all the stuff that we want to buy. So that's definitely true, and that's also a measurement on assets like Bitcoin that are scarce, that are going up even more in value. So on the other hand, if we see such a supply increase in money, we're seeing that the money that has been printed is essentially being used for purchases of assets that are a protection against inflation, so scarce. As you can see, the valuation of a dollar has decreased over time, and pretty much in 100 years, the valuation of $1 is currently 1 cent. So that means that holding your asset into a USD isn't the right thing to do, but it might be the right thing to do during periods of a crisis. So if you have the dot-com bubble, if you have the housing crisis, in the first period of a market crash, there's one thing that's actually doing great, and that is cash. As in 2008, also gold dropped by 30%. In the dot-com bubble, gold has also corrected with 30 to 40%. So the best thing you could do then is to have a big amount of cash in your portfolio. But in general, holding USD doesn't make sense. Hence why it makes sense to have Bitcoin, which is yielding you 40 to 60% year on year. And that's why you see all those Bitcoin treasuries. Now, why is this relevant? Well, Bitcoin tends to move in cycles. And we've just seen that the M2 supply is just slightly starting up. In China, it's firing up. The Fed is likely going to turn around on Q2, reducing the inflation or the interest rates, which means that we're coming out of the longest bear market in history for altcoins. And as you can see, the chart is a pretty much simplified version, but you can see that the amount of M2 supply was significantly reduced during 2021 and 2023 and has only started firing upwards recently as the business cycle and economies are pretty much struggling at this point. It's very likely that we're going to be expecting way more money to be pouring into the ecosystem, and that the only reason for that is to be happening is to be seeing a case where the interest rates are going to go down. And that brings me to this equation, as we can see here. What we can see is that the price of Bitcoin has been making a very big all-time high in 2021 during money printing season, and is currently moving higher than in the period of 2021 with substantially higher rates, but with the ETF. So the sole reason we are seeing this price right now for Bitcoin is that we have the ETF, but we are also having a case that the rates are way higher currently, and Bitcoin is still higher valued in terms of valuation. So if the interest rates are going to go down, that would mean that the price of Bitcoin is likely going to go up way higher than this. And that's what brings me to the charts where I can show you what the markets are doing. Bitcoin has been doing great and it's currently moving around 100K. And there are basically two questions we need to ask ourselves. The first one is, when is Bitcoin going to peak, and are we getting ourselves into a period of potentially a bear market? And the second question is, are we going to see, or how high are we going to go with the price of Bitcoin before that actual bear market is going to take place? So that's why I'm looking at the valuation of Bitcoin at this point. And there is the comparison with 2021, where the valuation of Bitcoin is just making a sweep of the all-time high, which we saw in 2021, which is currently happening as well. And people start making the remark that this is very much comparable and we are about to start the actual bear market. There are a few differences. And the first difference that we have is the case that in this period of time, money printing season was going through the roof. So at this point in time, the rates were going to go up, the dollar became stronger, gold started breaking out of its low, and we were quite high in our euphoria surrounding the actual market cycle. While in this case, we took the liquidity above the high, there's no momentum, the money printing season just starts, rates are still high, and the dollar is just literally correcting at this point, and gold is likely going to be peaking for at least 6 to 12 months. So the macroeconomic circumstances are completely different compared to the previous time in 2021. So you need to erase that entire scenario, where we need to be looking at a case of the chart that TechDev has been providing, which is beautiful. As you can see, this is the Bitcoin chart. This is the business cycle. It's measured by ISM and PMI data. And that is going to trigger the vertical steep part that we also phrase as the banana zone, or just phrase as the upcoming bull cycle for altcoins and Bitcoin. And as you can see, with the low on the business cycle here, it is just before the vertical steep move is about to happen. So in 2016, we have been seeing this case where after the business cycle started to take place, all the way from the red to the green dot, that's where Bitcoin started to expand. So in 2017, we ran from $500 all the way towards 20K. While in 2020, we also consolidated around, I think it was like 10K, and we ran all the way towards $70,000. Well, in this case, we are currently consolidating around 100K, only because we have a new group of participants being into the space due to the ETF, which if that amount of money is pushing Bitcoin to 100K, then we are, I think, underestimating the impact of the actual bull run to be happening and how high Bitcoin can go. So there is a case that in the vertical move, Bitcoin can go to 300, 500, or maybe even 800K if this red to green period is about to be taking place. And if we look at the structure of the markets, it is going into steps. So we had the breakout upwards in 2023, where we moved from 22K to 30K. Then we consolidated at that period for like 6 to 7 months, after which we had the next breakout from 25 to 30K to all the way to 70K, which then was followed by another period of 6 months consolidation, after which in October we ran from 65,000 towards 100K. And since November and December, for the past 8 months, Bitcoin has been swimming around that area, which basically fuels the case that we're currently in an equilibrium where we are about to start moving upwards, which is comparable to the period that we had in 2020, where we had a very long period of consolidation before a breakout starts to take place. So it's remarkable and it's comparable with the previous cycles, but just at a different stage. And we just need to move upwards with our expectations, given that the ETF has been bringing Bitcoin towards higher valuations. And I think if we didn't have the ETF, we would have been swimming around 50K. And then it follows us with the M2 supply chart, where the black line is a 12-week lead on the M2 supply, which basically tells us that Bitcoin is going to follow that. And if Bitcoin is going to follow through with that, we are about to see Bitcoin move to 160 to 180K in the next 3 months. And what we also know is that the second half of the year is usually the best period for crypto, that if the next quarter after that is going to take place as well, it is very, very likely that Bitcoin is going to reach a number of 250K or potentially even higher. During these markets, I'm always looking for opportunities to build my portfolio, and OKEx is bringing you an opportunity. They are the first fully licensed exchange in Europe with the lowest fees. And to help you a little bit with your portfolio and to celebrate this milestone, they're giving away up to 50 euros in Bitcoin if you sign up today on the exchange. Signing up can be done within 5 minutes, and if you deposit 100 euros worth of crypto, you'll receive the first 20 euros in Bitcoin. Start rebuilding your portfolio today. Go to the link in the description or scan the QR code and enjoy up to 50 euro in Bitcoin. The time to be bullish on Bitcoin is right now. However, it does feel like there are so many conflicting theories and scenarios that it's very hard to understand which way we are going to be heading. There's the bear market group, there's the bull market group, and the bear market group is getting more momentum right now as the altcoins are so terribly performing at this point compared to Bitcoin. All signs are on green though, and all signs are also green for altcoins, which makes me believe that there's never been such a big mispricing taking place in the markets as we see right now. And I'm in the space for 8.5 years, which is such a big arbitrage and market opportunity for anyone interested into crypto. And the realization is that this is basically the final easy cycle where we can have ridiculous returns. I think that we need to be open for a potential longer cycle scenario for all crypto projects and then a longer bear market. So we need to realize that there is a case of potentially seeing ourselves peaking in 2027 or 2028 and then have a 4-year bear market comparable to the dot-com bubble, that is possible. And you should be open for it. You should realize it. And that is also why I'm also able to continue holding my altcoin portfolio, because I realize that it's not going to be unlimited in terms of opportunities in the market. So there's more money required to move the markets up. And in that way, it makes sense to be looking at a case that we are about to be seeing a big move upwards. However, it could potentially not be the final one of this bull cycle, which might be an extended one. So thank you very much for watching. I'll see you again in the next update. Ciao.